Mr. Mark Sully, how are we, sir?
Mr. Matthew Gordon doing very, very well.
I'm glad to hear it. And I'm trying to understand why, though, because the nickel markets are just all over the place at the moment. How are you reading them?
Right. BHP's closed, run to the hills.
It's all that's over. What I'm hearing. Although we did cover it several months ago.
Yeah.
But go on. Talk about the ripple effects there.
Yeah. So this actually creates a massive opportunity. So, after we talk about the nickel market itself, we'll come back around to that. Nickel price to come off about 5%. Obviously, with that kind of macro overhang, we were retracing. We've retraced now. We're still up over $1,000 a ton from where we bottomed out a few months ago. But we've seen inventories continue to climb a few thousand tons. Again, expected. We still may see another 20, 30,000 tons of nickel hit the LME and Shanghai exchanges. And again, that's just material as these refineries ramp up, get coming into market. And we've seen prices sulfates hanging up in China, but stainless has gone a little bit soft in that time frame. The key thing here is, and we'll talk about BHP, and then we'll talk about the actual data, the facts. Again, we saw a massive amount of noise in December, January, which unfortunately has colored the market tone for nickel. But we'll come back to the quote, the data, and we'll let some of the data speak. So obviously, since we talked 2 weeks ago, big news: BHP announced they're shutting all of their Western Australian operations later this year until at least 2027. Again, we talked at length multiple times about their statement in February about the market being a massive oversupply was completely wrong. And again, we'll get to the data in a little bit. The key thing with this Western Australia announcement, it's not an indictment on the nickel market. It's much more an indictment on the cost structure of Western Australian operations. If you cannot design and operate a mining complex to make money at $7.50 a pound nickel, again, for context, in the early 2000s, we used to argue about whether the long-term price was $3 a pound or $2.75 a pound. For my last life with RNC with Dumont, we used a $7.75 long-term price 5 years ago. We're using a higher price today for Crawford because, again, we're seeing cost structures in the industry continuing to move higher. And so, if you can't make money at these levels, there is other things going on in your operation. In Western Australia, it's unfortunate. I mean, it's basically been a full employment market now for the better part of a decade. And so you've got wage costs that are, extremely, extremely high. You've got most of these camps now are fly in, fly out operations anywhere in Western Australia. So you take your salary, you add another third to half in terms of basically keeping them at site during that time frame. And so, you've got a massive thing with labor. Energy is not cheap in WA. And the challenge is BHP underinvested. They had that operation up for sale for the better part of a decade back in the 2010s. And so, they've got a bunch of, 30, 40-year-old mines that they really haven't invested to drive to that next level of low cost. We would be printing money at these prices today. And most of the next generation of new projects would be printing money at today's prices. So, what I want people to take away is this is not an indictment of where the nickel market is going. This is an indictment of a 40-year-old operation that has been underinvested in one of the highest cost places to operate. And BHP really didn't, took their eye off the ball, and we're hoping for, I don't know what kind of nickel price they're expecting, but, we're quite happy with where nickel prices are right now.
Okay. So legacy issues, well, I guess cost controls, usual big company problems, and labor costs, energy costs across the board. Okay. So the message loud and clear. As far as you're concerned, this is not a reflection of the current nickel market. This is a company's specific issues over, say, 40 years worth of effort on their part, or lack of effort on their part.
Yeah.
Okay, fine. Anything else you need to add to that?
Yeah, no, and then on the lack of effort part, the other piece I forgot to mention last time we talked, it had just come out the end of the week before, was Vale Base Metals' big new copper nickel strategy. Again, a former colleague of mine is now running the place and had high hopes that they were going to be, for the people of Sudbury, Thompson, and some of those communities, that they were going to be looking, for an opportunity to really reinvest the capital. Production from Sudbury's dropped by 50% since we owned it at Inco back in 2007. Production at Thompson's dropped by 75% since the Inco days before Vale took it over. And unfortunately, again, nothing, they're basically going to try and get back up to the level of where they were, 3 or 4 years ago, which is still, massively down versus where they were 15 years ago. There's really no big new projects coming down the pipe. And anything that would be considered true growth is really sort of in that the last bucket in the chart, that 2030 plus, which, we all know, ends up in big companies being pushed out to 2035 and 2040 and beyond. And so, again, with BHP and Vale, two of the Western world's biggest producers, basically, not adding much production and taking production off the market, this is massively good news for other nickel projects. Companies want, the car companies, the battery companies, they need IRA compliant nickel. They're building, dozens of battery plants in the US that, in order to qualify for subsidies and again, to be looked on favorably by the market, they don't want to use, Indo-Chinese blood nickel. They want to use, clean green nickel that comes from one of the allied countries, going forward. Again, we'll see who wins, Trump versus Biden, but it doesn't matter. Each of them is going to be equally protectionist around, supply chain issues. And so, you've got the car companies, and even in the alloy and stainless steel side, they don't want to use Russian nickel. They don't want to use Chinese nickel. And so, when you've just taken another big chunk of the nickel that qualifies as RA compliant out of the market for 3 or 4 years, for the handful of projects like ours at Canada Nickel, this is tremendous news.
But are sort of Western companies trying to compete on a sort of level playing field? I mean, should they be looking at the type of product they put into market? What the car manufacturers want versus what's going to be realistic in terms of being able to make money out of it that may not necessarily align. So what are the options for some of these big players?
Yeah, the key piece there is, I think, the kind of scrutiny that was put on diamonds, the kind of scrutiny that was put on cobalt sourcing is now coming on with nickel sourcing. There was a great article, and we talked about it 3 or 4 weeks ago from Bloomberg, really talking about the breadth and depth of the environmental, labor impacts that those operations in Indonesia are having. And so we're seeing now a steady flow of stories, really highlighting different dimensions of that. And so I think car companies who are kind of willfully blind to saying, oh, well, we just buy from this person and we're sure that they're, sourcing material from, down, 3 steps further down, isn't going to cut it. And they're going to find out that customers are going to start asking where their nickel comes from. And so, the great thing that we've got with Canada Nickel and Timmins, we've got an entire district that we think we're opening up. There's a handful of other good big scale ultramafic nickel projects in Canada and a few other places that, not only produce nickel, but help remove carbon from the environment. And so, we think the timing of this, is ideal. So, we're in in excellent shape from a market structure perspective. And again, the market will wake up to this at some point. So
right. And what about, so you may have touched upon it or alluded to it, but with regard to things like the IGO and Wyloo, what's happening there?
Yeah, so they were looking at potentially building a battery precursor plant in Western Australia. BHP about 6 years ago decided to build a nickel sulphate plant, which was in Western Australia, which was a stupid idea. It's a 22.5% product. It's difficult to make on spec, and because the quality, nickel content of batteries is going up and up, that those input products need to be pure and pure and pure. Miners should just focus on providing the lowest cost, highest value product that a precursor company can use directly, and let the precursor industry spend all the capital to get it to whatever 9999 refining value needs to be. And so when IGO and Wyloo announced this a few years ago, I thought, that's a bad idea. And thankfully, they've now killed it. So again, they should just focus like what we're doing with our net zero metals and Timmins, focused on using proven technology, low cost approach, and using that to be able to get something that both the precursor and the stainless alloy industry is quite happy to use.
Right. Is it okay? I'm understand, and basically stop trying to increase their risk potential and decrease their return profile. I like that. Also like this idea of that. I know we talked about it a little bit in the past. And I saw your article that you put in was it the Post? I can't remember.
Globe Mail.
Globe Mail, but blood nickel. It kind of reminds me in a financing context, so about anti-money laundering process. This is kind of like anti-metals laundering. You can't sort of pass the buck. The OEMs can't pass the buck by having it 3 or 4 arms lengths away and say, "Oh, we didn't know." You do know, and you should be held accountable. So that's a good thing. It's a good thing. Well, should we dive into a little bit of Canada nickel news? Because I think lots of people writing in, contacting me, and sort of wanting an update, and perhaps we can do a proper one after this market update later this week. But just give us a sort of top line. What's going on over there with you?
Yeah, no, for sure. No, it's been a busy month. We're basically pushing hard on multiple fronts. On the exploration front, we've got great results. We'll be publishing a resource out here on Deloro shortly. We've been successfully drilled off the PGM zone that was basically material we were already mining within the Crawford pit. We treated it as waste because we weren't able to upgrade it to a resource. We'll be in a position to have that we'll be able to include in future mine plans. And we're seeing great success. We're running 7 drill rigs right now. So it's taken a while to get the assays through the system, but they are now coming, and people should see a steady flow of drill results. Again, we're not going to put out result releases on every few holes, but as it makes sense through batches of holes and that tell a story, we'll be doing that through the remainder of the year. On the engineering front, we're doing what's called the front end engineering design on Crawford. That's all going quite well. Found some ways to pull out some cost and haven't seen any, big negative surprises yet. So, quite happy with where that engineering is landing. On the permitting front, we're on track to deliver the impact statement in September. Again, feedback both with the federal government, which is the impact statements for that process. That also feeds into the provincial permits. That's going exceptionally well. And then on the financing front, making great progress with Scotia and Deutsche Bank on the JV equity side, and then as well with the debt agencies in terms of putting the debt funding package together. So that's a quick snippet of what's there. And just in the past 2 weeks, we've had a couple announcements. One with Ormet, with the bridge finance. We've done this 3 times prior. Each of those to a major financing strategic event. The last one was the deal with Samsung SDI. This is a 6-month bridge that coincides with when we think we'll be concluding the JV equity process. And so again, we just think it's a great way to continue to fund the project and do it in a way that makes sense and potentially non-dilutive to the company as a whole. And so we also announced that we're creating a SpinCo titled ExploreCo. We'll come up with a better name, if and when we decide to take it public. But what we've done with that is we already had an 80-20 joint venture with Noble on the Man properties, which are 3 big properties, each of which are larger than Crawford. And then we just grouped in our eastern properties just to the east of Man. And in return, we've pulled out the rest of the surface rights and additional mining claims and patents that are sort of scattered around Crawford. And by completely consolidating 100% ownership of everything that Noble had around Crawford, that makes it, will make it easier for us, to continue to move Crawford forward, and when we get to construction decision, hopefully by this time next year, we'll be in a position where we can move quickly forward.
Okay, so busy with you guys, and we'll get into the detail later this week. And we just don't. I think we're both a bit short of time this morning. But other company news. Let's rip through it. Charles and Mitsubishi.
Oh, sorry.
Yep.
We skipped over the market facts.
Yeah. No, I was going to come back to those at the end.
Oh, really?
As a nice,
okay,
yeah.
Sure. Yep. Okay. Cool. Okay. Yep. Okay.
Go for it. So let's get through. I'm just conscious
company
of time
news.
though. So Charles, company news. Charles, Mitsubishi. What do we got?
Yeah, so Chalice announced that they've got MOU collaborating with Mitsubishi to develop their Gonneville project. They're working right now on their pre-feasibility study, which they expect to have an updated pre-feasibility study in mid-2025. Again, they put out a kind of a crazy PEA with ridiculous market prices, and so again, good to see an experienced mining company like Mitsubishi. I mean, they're much larger than just mining, but good to see them get involved there. As well, I think one of the leading nickel sulfide projects, Centaurus. Good to see their feasibility study results came out about a week and a bit ago. NPV about $700 million US, 31% IRR on just under $400 million of initial capital, and another $500 million or so life of mine. The just a couple points I want to highlight. Again, people always love high grade, but doesn't necessarily translate into super high recoveries. Their life of mine recoveries, 73%. It's an open pit operation. That's part of the reason, with the higher grades that they have. But they're mining at a 5-to-1 strip ratio. And the challenge when you have higher sulfide deposits is you give up concentrate grade in terms of improved recovery, but you end up, they've got a 12% life of mine nickel concentrate, which obviously has an impact on the downstream cost. But, overall, again, coming back to the BHP, they're going to have a C1 operating cost of $230 a pound, which is be about $5,000 a ton, and an all-in sustaining cost of about, just under $8,000 a ton, which again, at a $17,000 nickel price, would generate massive amounts of free cash flow. So, just coming back to the initial thing, just because, a bunch of old mines in a high cost area need to be closed, that doesn't mean that the new set of nickel projects can't, generate robust cash flows in the current market conditions.
Okay. And then we better get over to Sudbury. What's happening over there?
Yeah. So both of the, the two smaller companies who are advancing projects had some very good news. SBC Nickel doing some infill drilling in the area where they're open pit. Again, anytime you can get close to 1% intervals that are open pittable, those are great to see. And so, this is a property they had piece of. They consolidated the rest of it with from Vale. So very good to see that team hitting some good numbers. And then Magna continues to drill off what they call their 109 footwall deposit. Again, footwall deposits in Sudbury are much more copper and PGM value than really nickel at this point in time. But there is still some nickel there. So, you have 5% copper, 0.7 nickel over, and almost half an ounce of PGMs over 15 meters with even higher grade intervals. So, great to see Magna continuing to advance. They've announced that they've started the development of their bulk sample, which, will basically, get them into mining, generate some revenue to offset their exploration costs. So, excellent to see.
Okay. And we better, and the last two I've got down here, sorry, did you talk about Magna there?
I did. Yep.
You did? Yeah. Good.
Yeah.
I was slightly distracted by some beeping in the background. So Talon and Alaska Energy raising money.
Yeah. Talon sold an additional 1.67% royalty Triple Flag. Again, they're one of the good royalty companies. So again, an endorsement that Triple Flag's putting capital in that project. That gives them another $8 million US in the till. And then Alaska Energy, which has a bulk tonnage with some other high grade potential in Alaska, raised another $3 million and made some tweaks to their board of directors going forward. So again, good to see there's some activity continuing on with some good names in the nickel space.
Yeah, it kind of says that industry is interested and needing stuff to move forward. And just talking of that, when you finish up and wrap up with the kind of some INSG numbers and maybe some update on the EV front too.
Yeah. So as it started, the key here is market facts. So again, start of the year, BHP talking about massive nickel supply overhang. INSG just put out their July report, which is basically year-to-date May data. The market was actually in a small deficit over the last 3 months of the year. And that's even with nickel demand only up 8%. My forecast at the beginning of the year was that we're going to be into the double digits. And I think we will still get there once we get into September, October, November. the other reason is, we're seeing constrained supply growth. We're only seeing refined supply up 6%, and that's been driven by mine production that's only up 3% on a year-to-date basis, because Indonesia, either through consciously, and they are limiting ore quotas, but we're hearing about ore grade issues. They're continuing to import, some of the plants import ore from the Philippines to be able to fill them. And so, again, nickel demand's robust. The Indonesians, aren't going to blow this market up. And so, we're seeing much, much better numbers on the EV side of the story. Again, if you go back to the rhetoric from last, from earlier in the year, you had EVs were going to collapse, sales were going to really slow down. No one wanted EVs anymore. Again, here's the data. Plug in, this is hybrid EVs, the whole set, up from the month of May, up 23% year over year. People might say, oh, it's just all hybrids. Well, hybrids were up 37%, so that's more, but battery vehicles were still up 17%. North America, US, Canada, which from a nickel battery perspective is important, up 18%. And, overall for EVs, year-to-date May is up 25%.
So, like I say, facts, data, kind of useful. You're making a call on how price moves, how inventory moves, through the rest of this year. As ever, great to catch up with you, Mark. Speak to you later in the week with regards to Canada Nickel updates, getting into a bit more detail there. I better let you go because I know you've got a very important call in a second. So we'll see you soon.
Thank you, sir.